A very good morning, everyone, and thank you for joining. My name is Rona Pichu, and I'll be your host for today's webinar on the topic corporate tax. Before we dive right into the webinar, I would like to give a brief introduction about your company. ITC Accounting and Tax Consultancy is one of the top and most reliable tax agency firms in the UAE. In a short span of time, our team mastered how to give clients the best tax solutions. You can expect an uncompromised attitude when it comes to quality and professionalism. We deliver a sleek and professional outcome that sets us apart from the competition. With the leadership of Mr. Ahmed Sharfuddin, we've already positioned ourselves as the VAT and excise tax specialist in the market. We have a fast-growing team of qualified and dedicated professionals with innovative and commercial aspects to meet today's highly challenging business environment. By bringing the best team at your service, highly experienced tax and finance specialists in the industry, ITC will come to relationships with various businesses by having the ability to deliver satisfactory. As a testimony to our strategic and proven approach, most of the customers we serve are generated through referrals and repeated businesses. Moving on, I would like to give a brief introduction about our panelists for today's webinar, Mr. Ahmed Sharfuddin. As a founding partner of ITC, Ahmed Sharfuddin is an integral part of the company, having performed hundreds of tax audits and being involved in more than 50 tax litigation cases. He brings to the table a vast experience of taxation and compliance. Since ITC's inception, Ahmed conducted hundreds of VAT and excise health checks, including many of the notorious groups in UAE and the region. With a notorious reputation in tax litigation, he was involved in building the strategy in many tax litigation cases as he successfully assisted companies in reducing hundreds of millions in administrative penalties. Mr. Naresh Pandey. Naresh Pandey is Chartered Accountant from the Institute of Chartered Accountants of India, has over 15 years of experience, which includes responsibilities such as UAE VAT, international taxation, transfer pricing, direct tax, taxation litigations, besides others across UAE, India, and Nepal. Over the years, Naresh has been leading the team for advising different industries. Naresh has the portfolio of leading the team for transfer pricing audit and implementation of transfer pricing laws in the leading telecom provider Airtel in India and Africa, Delmont in India, Bharti Group, which is one of the biggest groups with above 150 entities in India. Besides, Group in DCC, GCC, and other leading groups in UAE for indirect tax. Naresh has advised over 200 companies across the globe for international taxation, transfer pricing, indirect and direct taxes, audits, and advisory in over 15 years of his journey. Mr. Abdul Razak. Abdul is a seasoned tax professional with over four years of experience in a variety of tax-related fields. He is a well-rounded understanding of the industry and has honed his skills through years of hand-on experience. His expertise in tax advisory and accounting has made him a valuable asset to the team, as he is able to handle the most important cases and clients with utmost professionalism. Abdul is known for his attention to detail and his strong work ethic. He takes pride in doing his homework and approaching every task with dedication to getting it right. His approach has earned the trust of clients and the respect of colleagues across all departments. With Abdul and the team, clients can rest assured that their tax needs will be handled with care and expertise. Now, I would like to hand over to Mr. Naresh to start off with the webinar.
Hi, good morning. Thank you, Rona, for the introduction. So we will be covering the corporate tax aspects so far, what has been published till date. We'll try to summarize as much as possible, and we'll try to keep most of the coverage during the seminar today. So if we see the background of corporate tax, it was like announced in January 2022 that the corporate tax will be started in UAE and it will be implemented from 1st of June 2023. So in April 2022, they came up with the public consultation document wherein they had asked to provide the feedback of the law they are going to propose. Then on October 3rd, they came with the issuance of the decree law, and it was published in October 10, 2022, and the effective date being 15 days after the publication in the official gazette. So the date will be October 26, 2022, wherein the corporate tax will be effective, and it was published for the general public on December 2022. And we have an effective date for the corporate tax. It's 1st June, which has already started for some of the corporates. Depending on the financials, we have different effective date for all the companies. Next one, please. The main features of corporate tax that we are going to implement. So far, we are just listing out what will be the coverage for today. So we are trying to cover the articles that has been published. So we will be starting with the articles that are in the law. So we'll start with the Article 3, and we will go with today's feature will be the entire coverage, which we can make it like Article 3, like imposition and so on. So we will try to cover all these aspects during our seminar today. Okay, so let's go to. Now the imposition of corporate tax. The authority, they came with the lowest tax rate across the globe, 9%, but we have they categorize it like we have a small exemption like till 375 of our income. The taxable income of the entity will be taxed at 0%, and the income that will be above 375 will be 9%. So we have relaxation of 375 while we are going to pay the taxation. Then we have categorized like the mainland and the free zone, like qualified free zone. So if we are qualifying for the free zone, then we have zero rate taxation. Then if subject to qualification in that we are going to cover in the later stage. So there is a diminished rule that if the company has income or income that is deviating from the main principal component up to 5% or 5 million, whichever is lower, we will still qualify for the same. Okay. So the exempt persons. So which are the entities which are going to be exempt? Like first we have a government entity. Then we have government controlled entity. Then we have a person engaged in extractive business. If they meet conditions in Article 7, the main principle is if they are subject to Emirates level taxation, which differs and reaches up to 55% of the taxation. Then we have the person which are engaged in non-extractive natural resource business, like the alternate source of energy, so if we see, which is also taxed at 55% of the Emirates level taxation. Then we have qualifying public benefits entities, which are covered in Article 9 and which has been published. Then we have qualifying investment fund, is provided in Article 10. Then we have a public pension and security fund and private pension and security fund, which are subject to regulatory oversights. They will also qualify to be an exempt person. Then we have like judicial person, which are controlled by the government entities. Then of course the investment fund and the public pension fund, those will be also covered as exempt persons, subject to they are undertaking the activity of the exempt person and engaged in holding assets and investment for the benefit of the exempt person. And if they carry out the activities which are ancillary to the exempt person's business. So any other persons that will be determined by decision of the cabinet as suggested of the ministers. The ministry has come out with the ministerial decision 105, which determines like which person will continue and which are going to cease to be a exempt person. So if the exemption that we have as of now is if the business is undergoing for liquidation or the termination, and if there is a temporary event or situation wherein which is beyond the control of the person, they still continue to be an exempt person. If apart from this, if they are deviating from the principal nature of their business, then they will cease the exemption, then they will be taxed as an other natural judicial persons. So if we fail to meet the exemptions, so how we can approach to the authorities to continue with the exemptions? So we have to apply within 20 business day, wherein we fail to meet the condition. Then the person, the authority will give you 20 business day from the submission to rectify the failure and all. And we can ask for additional 20 days if the authority authorized, so we can rectify in the period. If we cannot do all these things, then of course will cease the exemption criteria, and will not have advantage in corporate tax. Then we will have to be is treated as a normal companies, and we have to like file and we have to pay the taxations. Next one, please. Okay, so we are classifying the taxable person and what will be like their corporate tax base, on which incomes they are going to be charged. So first we have a residence. So residence person will be the persons that are incorporated in the UAE. Of course, the free zone being a part of UAE. Then we have any foreign entities which are effectively managed from the UAE. Those are the coverage. Then we have a natural person who are undertaking the business activities in the UAE. So the tax base will be like the worldwide income for the legal person, which is incorporated. Then we have like if it is effectively maintained, then also we have all the worldwide income will be charged for all these resident entities. So now we have the non-resident entities. If the persons like they have a permanent establishment in UAE, then they will be charged. For them, the tax base will be the income that is attributable to the permanent establishment. Then we have like state-derived income. So the UAE sourced income, which is not attributable to the PE, that will be charged. So far, we have 0% for taxation for the same. Then if the non-establishment they have a nexus in the UAE, then they will be charged on the income that is attributable to the nexus. So far, we have seen the nexus is related to if we are holding any real estate in the country. And next. Okay. Then again, we have unincorporated partnerships. So unincorporated partnerships, unless any election is made, they will not be treated as a taxable person. The judicial person, the individual partners are liable for the compliance of corporate tax in UAE. We can elect to be a taxable person, so we have to apply to the authority that we want to be treated as a judicial person. So once if it is approved, then it cannot be revoked uh, later on in other financial years. Then we have family foundations, which are also treated on the same grounds, which are usually for the benefit of the family members over there. For them also, it will be also treated as unincorporated partnerships. Okay, so let's on. So we have like for the natural persons, if there are situations which are beyond their control, which will be removed while calculating the days to consider the residence. So if we see the condition was like if the presence of the natural person is in UAE is due to the exceptional circumstances of public nature, like health measures, then travel restrictions, and imposition of legal sanction, war, and all the events, or can be like a private event when they have a medical emergency and they have to come to you for the treatment. So the exceptional circumstances that cannot be predicted by the natural person or the non-resident persons. So the natural person did not express any intention to remain after the end of the exceptional circumstances. Then the non-resident person, if they shouldn't have any PE in the country, and nor they shouldn't have any income that is attributable to the PE in the country. On that case, the days will not be considered as part of calculation for the residency of the person. Can we move to next? The free zone persons. The uh, the cabinet ministers have issued cabinet decision 55 2023, which is effective from 1st June 2023 for determining the qualifying income of the persons as per the income tax law number 47. So with it, the Ministry of Finance has come with the ministerial decision 139, which will determine the qualifying and excluded activities for the purpose of qualifying free zone. So the criteria a person should meet for qualifying as a free zone person is the first is they have to maintain adequate substance in the free zones. And the free zones has to be the designated one, which is as per the decree law number 8 of 2017. So far the same which has been published for the indirect tax remains the same. Then of course they should be deriving the qualifying incomes, which will be discussed in the later stage. Then again we have they have not uh, elected to be the normal person for the corporate tax law. Then of course if we have the qualifying income and diminish non-qualifying incomes, for that we have to have transfer pricing regulations for any transactions that is executed. Then we have to have an audited financials as per IFRS, which will be discussed, which are the later on, which for the companies which should be audited for the corporate tax purposes. Then again, the diminished rule that we were discussing, the 5% of total revenue or 5 million, whichever is low, they still will qualify. But if we exceed this amount, then we will definitely lose our exemption for qualifying free zone activity, and we will have to we will fall under the normal corporate tax base. Okay. So if these are those were the conditions that we discussed that a person should hold to qualify as a free zone. So what happens if we fail to meet the conditions that has been uh, given in the earlier slide? Then of course we'll seize the benefit of qualifying free zone, and of course will be taxed from the beginning of the period when we fail to meet the conditions. Then of course we will have to pay for next 4 years. So altogether the 5 years we have to be taxed at normal 9% of regulations. And when, like we have first condition, like maintaining an adequate substance by a free zone person. The adequate substance will be like if it is effectively managed and controlled within the free zone itself. Like if we should have adequate assets, of course, the offices, the assets, then number of employees, then the operations that has been carried out has to be carried out in the free zone itself. Then the decisions and management decisions and everything should be carried out in the free zone. And the only we can outsource our activities if to other persons if they are based in free zones, and we have constant supervision on the effect. Then now we will come to the qualifying incomes. So which are the incomes that will be qualified and which are the incomes that will be excluded? So the incomes that will be included will be the domestic. If we have the incomes that is attributable to domestic PE and of the and any foreign permanent establishment. And if there is any ownerships, like if there is some incomes that are attributable to the immovable property, which is given as the final consumptions, like we can say residential buildings and all, then we are deriving any incomes from the persons, any other persons who are having the excluded activities. Then the incomes that we are deriving from non-free zone persons, so those will be the excluded ones. So the included will be the income that is derived in the free zone itself, and within the activities that has been listed out, which is not in excluded activities, subject to satisfaction of diminished regulations that we have. So Mr. Abdul will carry one or two slides, then I'll be back with other slides.
Good morning, everyone, and thank you, Mr. Naresh, for the wonderful presentation. So I'm going to start how to calculate the taxable income. So the financial statements will be prepared in accordance with the accounting standards accepted in the UAE. So we'll be arriving an accounting income from the financial statements, which we prepared, which will be adjusted for to get the taxable income. So this adjustment will be like the unrealized gain or loss, exempt income, release deductions, and the tax loss release which we have. So the company who is making the financial statements on accrual basis, they can elect to consider the gain and loss on the realization basis, like the fair value or impairment for assets and liabilities. So we have small business relief available as per UAE corporate act. So this small business relief is available to those companies who is having a revenue which is less than 3 million for the tax year and in the previous year as well. So the company can elect for the small business relief in the tax period, and the small business relief will be available for 3 years. We say like up to 31st of December 2026. So the resident shouldn't be a part of an MNC company, and they shouldn't be part of a qualifying free zone entity as well. And any tax loss which we incur, we cannot carry forward if we are opting for the small business relief. So the company who is going to opt for the small business relief, they have to consider if the company is making any consistently, if they are making any loss. So it will not be worth for them to go for the small business relief going forward. And like we said, the small business relief will be available for 3 years up to 31st of December 2026. Like the company whose tax year is starting from 1st of Jan 2024, they can get this relief up to 31st of December 2026. Like 3 years they can get it. So maintenance of books of accounts. So in UAE, we have to maintain the books of accounts as per the accounting standards, which is accepted in the UAE, like IFRS, using IFRS and all.
Go to the previous slide once. Okay, now we are into the maintenance of the books. So of course, we have to have in IFRS is our accounting method. Then we have to have in financial year. So far, if we don't have a separate financial year, then of course we can apply for the calendar year. Then the books has to be maintained in the ERP, which is should be maintained in the ERPs. Then of course the auditing and everything we'll discuss on the later stage. So let's come to the exempted income. Yeah. So we'll come to the exempt income. So the first is the dividends and the profit distribution from the residential jurisdiction person. So if we have any dividends that is coming out from the UAE resident companies, it will be exempted. Then we have like dividend from the foreign entities and the capital gains, which will be from UAE or the foreign companies, will be exempted subject to meeting the participation interest. The participation interest will be the 5% stake in the company, and we should carry it for 12 months, or we should have an intention to carry it for more than 12 months. On that category, we can we can benefit from the exemption, and of course our incomes will be exempted from UAE corporate tax law. Can we go to next one? Okay. And if we are transferring the transfer of the assets, if we are transferring from the qualifying group, which will be 75% of the common ownership, if we have say 75 of the common ownership, then of course we can transfer the assets in between the companies. But we have to continue the holding has to continue for the next 2 years from the period of the transfer of the assets to our group companies, and the price will be considered the book value that is existing in the company. It will be transferred on the same value as the book value. So there will be no profit or loss engaged in the same. Okay. I think we discussed the same, that the group relief that we had, like for the transfer of asset, anything that we have 75 common ownership and we are going to transfer, then the structure, the holdings should remain for next 2 years. Then we can transfer it on the book value. I think we covered this. We can go to next one. So now we are into the business restructuring relief. So of course, the authority, they will allow us, if anything, if there is some reliefs, and if there is some business needs and the commercial needs, if we have like we have a general anti-abuse rule that is in place, that if we are going to restructure anything, then of course that has to have like the valid commercial reason and all. And plus, if we have say if we have some provisions in law for which we want to get the benefit, then we can restructure our company just to get the benefits that is existing in the law itself. So I think we can go to the next one. Okay. So now the general interest deduction rule. Of course, there are some of the expenses for which we have some limitations rule, like entertainment and interest and all expenses. Then we have like maximum we can take the deduction for interest will be 30% of EBITDA, or they have said the 12 million, the safe harbor amount. Then the applicability of the same will not be applicable for long-term infrastructure projects, and will be to the banks and other financial companies whose main principal business is the lending out the finance itself. Okay, now we will cover the expenses which will be deductible. Like we have like some of the expenses which are prohibited to carry forward, like to claim the exemption in the UAE corporate tax. Amongst those are first, which is the donation, if it is made out of which is made to the person which are not the listed ones as per the corporate tax law, the qualified public entities, we can say. Then of course the fines and penalties. If then we will not get the expenses deduction, but if the penalties are of the commercial reason, then we will get the benefit. Then of course the bribes and other related payments will not be covered. Then we have dividends and profit distributions, which are usually made after the closure of financial channel. These are a part. These are not the part of the company's financials or activities. It is paid after having the P&L and everything. So it being a distribution, it will not be treated as the deductible expenditures. Then again, we have the taxes, the corporate tax, of course, itself, it's not an expense. Then we have the VAT, which we are getting the inputs. Then those will not be deductible expenditures. But if we have the VAT for the expenses which we cannot take as an inputs, then those being a part of cost, we can claim that. And then again, we have entertainment expenses. Of course, the entertainment expenses, those we are giving to the customers, the shareholders, or the suppliers and other business partners. Then those will have a capping of 50%. And for the employees, so far they have said there is no capping rule, so 100% will be exempted on that. Then again, we have any related party. If we are making any related party payments, then it will be deductible. The thing is, but subject to meeting the arm's length principle. If we are within the arm's length of the transfer pricing, then we can claim it up to the arm's length price only. Like we are elaborating the interest expenses, of course. Net interest expenses that can be deductible, we discussed earlier, is 30% of the EBITDA. Then we have the capping rule is not applicable for the banks, insurance, or other regulated financial bodies. So in the UAE, and of course for the natural person also. So if we have any borrowing from the related parties, then it will be allowed. It will be allowed up to the arm's length principle. And if we are getting it for the valid commercial reasons, and it shouldn't be it shouldn't be a part of the dividend distribution or any other distributions that we are going to make to the stakeholders. For those, the interest expenses will not be allowed for those reasons. Next one. Then the transactions with related parties and the connected persons. The OECD, the Organization for Economic and Cooperation and Developments, as per OECD, any transaction that we are undertaking between the related parties or the connected persons, that has to be tested as for the arm's length. So the transfer pricing will be applicable on those transactions. The CT law, it also refers the TP methods and applicability based on the OECD model. So when the outcome of the transaction or agreement does not fall within arm's length, then FTA asks us to make the adjustment on the prices that we have. The allowances only will be subject to the transfer pricing rule and subject to we meet any arm's length price for the payments or any transactions that we are executing in between the related parties or we are making to the connected persons. Can we go to next? Okay. Then we have the provision for the tax laws. So if we incur any taxes and any loss in the company, and if we have the group where we have 75% common ownership, on those grounds we can transfer our losses to some other group entities, so subject to we have 75% ownership, and of course the offset that will be allowed will be the 75% of the income of the company which is receiving the loss. So the conditions are like the condition as we discussed, like the companies has to be 75% common ownership. then again, it shouldn't be an exempt or qualifying free zone. Then the offset can be for 75% also. Now, of course, the financial of both the companies has to end on the same date. So if we have a different date, then we can take the exemption. So the amount that can be set up will be the 75% of the taxable income of the company that is going to take the transfer loss in the example that we have provided over here. So what happens with the loss that we have in place? So if we don't have any group companies where we are going to transfer, of course, the loss which we incurred in the current year, we can carry it forward indefinitely, then we can adjust those in the subsequent years. In doing so, also we have the same rule like in any year's profit that we can adjust up to 75% of the income of the particular financial year. Then if there is anything, then we can carry forward indefinitely. Then for carrying the loss, then we should not have any activities that is exempt and of course before if we have any losses before the applicability of the corporate tax law, say 1st June 2023, it will not be carried forward and we will not be getting the relief. Only it will be applicable once we have the first financial period under the corporate tax law, then on those only we can carry it forward. And then we have some limitations for carrying forward the losses and getting the claim on the subsequent years. Then the continuous ownership should be there for next 2 years. 2 years or the years till which we are going to forward the losses. Then if we are if we are a tax exempt person and say stock listed, then we don't have any restriction on the exempt income. So we have our next coverage for the tax grouping. So we can see lots of the companies in the UAE, they are operating as a group and all, and we can see the same in the VAT law also. But we have the coverage requirement different from what we had for other taxations. So the principle right now we are having is we should have at least 95% of the voting rights or the shares within the companies directly or indirectly to qualify as a group. So if we are qualified as a group and if we are forming a tax group, of course, the calculation and of course the transaction that is executed between the companies, it will be easier and easier to govern. The only thing over here is like for the companies, for the group, it will be treated as a single taxable person, and we will have exemption for 375,000 only. So of course, the administration cost will reduce on it, but we are also going to lose the benefit of 375, which is there for individual companies. The benefit we are getting. So before forming a group, we are advising the people. At least if we see how if it is beneficial for us, looking at the administrative cost, then of course with the relief that is there there is with us for 375, then on these grounds we can go ahead and create a tax group. Next one. The calculation of CT payables. Now we discussed about the financials, then we discussed about our preparation of books and all. Now what is the amount that is taxed? So if we see for the individuals or judicial persons, the income that is up to 375, it will be taxed at 0 rate. Then the income that is exceeding 375 in any taxable period will be taxed at 9% on the additional income above 375,000. So for the qualifying free zone persons, we have for the qualifying activities, we have a 0% corporate tax. Then for non-qualifying activities, that for non-qualifying incomes, we have 9%, and we don't have exemption of 375 for the free zones, since we already have for the qualifying income 0%. So we are discussing how the payments and how the calculations means how the amount we are going to derive to for the payments. Now we have an income now. Then of course up to 375 we are going to pay it 0 rate. Then for any additional income that is above 375, we are going to pay 9%. The city liability will be the total of the two. Then of course, if we have any foreign tax credit, means any credit any tax if we had paid in any third country as a nature of withholding taxes and all, subject to having a DTAA agreement, we can take the credit for the same. Then what the amount that remains after that is the final the corporate tax we are going to pay. The limitation for foreign tax credit will be the amount that we paid, or 9%, whichever is lower. General anti-abuse rule, as we discussed earlier, like the form, if we are going to do is restructuring and all, there should be the first clause that we should have a finance valid commercial reasons, and another is to take the advantage that the law has given to us. If we have like if we are going to restructure the company in such a way to the purpose, if the purpose is just to evade the tax, then that will not be allowed. So any restructuring we are going to do post the publication of the law, which already has been done in 2020. So moving forward, if we are doing any restructuring, or if we are doing any restructuring, we should have like a proper valid reason. Then of course the valid reason for those will be like first, if we have holding companies and all, if we want to match with their financials and all, these are the things. Then of course we have the reliefs that the authority gives to us. If we want to take such advantage, then of course we can restructure ourselves on the same notes, so that we are getting the benefit of the law. Okay, so example we will not discuss it.
So corporate tax registration and registration. So tax registration is required for any taxable person. Any taxable person is required to go for the registration, except for the exemptions given by the corporate Federal Tax Authority. So for the tax registration, it is open. Right now, it's currently available for every taxable person to get the registration, and the required documents are very basic. So we can do it from the K portal itself. And for the exemption part, there are entities who can get exemption from the corporate tax registration, like government entity and controlled entity, started business, like so. By default, the government entity and controlled entity will be exempted from the corporate tax registration, and others has to be notified the government for the exemption. And for the tax deregistration, the entity shall deregister for when the business is ceased, or if they are not going to conduct any activity going forward. And the deregistration process will be complete once the entity is fulfill all their dues to the Federal Tax Authority, including its tax return, and if there is any penalty which they owe to the Federal Tax Authority. And once it is approved, the authority will deregister the person for the corporate tax with effective date from the cessation of their business. The timeline for the tax deregistration. So the entity can apply for the deregistration within 3 months from the day they cease their business. Or in case if for the natural person and for the juridical person as well.
Or we have already discussed, so like the exemption, then of course the accounting and all. Now we came to the closure of year. Now we have to file the returns. So of course the returns has to be filed within the 9 months from the closure of the financial period, taxable period. So if it is a calendar year, then of course it will go till September, end of September. Then if we have a group registration, then the parent company that is listed in the group, they have to file a tax return on this. Then FTA, the financial statements, then FTA, they have the right to ask for the financial statements on the based for the base how the income tax has been calculated. Then authority, they have already come with the requirement for the audit of the financial statements also. The ones that exceed 50 million of the turnover or the free zone, they have to have an audited financial itself. Then authority, they have mandated any companies which has revenue exceeding 3 million, they have to have the books prepared on the accrual basis. So up to the 3 million, they can maintain on the cash basis. Yes, we are into the requirement of financial audits. Then of course, any person that has a revenue exceeding 50 million in the relevant tax period, they have to get audited. Then qualifying free zones, they have to get the books audited. So far for the free zones, we already have audit requirements from all the free zone authorities. So of course, for the corporate tax also, they will be taking the financials. Those will be prepared and audited. Okay. The next one. Yes, now we are looking the transaction that is taken with the related parties, that has to be tested as arm's length principle, and of course we should have like the documentation for this same. So what is the arm's length principle? The arm's length principle is a principle where we ensure that the transaction we are undertaking between a related party is not influenced by the relation that we have within the related parties, and the transaction has to be executed on the same ground that if it was any unrelated party with whom we are transacting it. So we have like the coverage of TP regulation in the country. We have like for the domestic transactions also. Then of course we have any cross-border transaction with our related parties. So the related parties, if we see like for the natural persons, it is both the degree kinship of the natural person and the judicial person if we have something. Then if we have 2 or more judicial person, then on that ground, we should have 50% common ownership, can be direct or indirect. Then we have control on the jurisdiction of the person. Then any person and its P itself, it is a related party. Then the partners in the unincorporated partnerships, they are the related parties. Then for the trust, then the trustees, founders, settlers of the trust. So we have a method. Then so we are deriving in the price, say the arm's length testing. So for the arm's length testing, we have 5 major methods that we are undertaking. Some of the countries, they are specific on some of the methodologies, but if we see internationally, it is acceptable as per OECD. We have 5 methods. Then we have like first one, the comparable uncontrolled price method. Then we have cost plus method. Then we have resale price method. Then we have a transactional profit split method and transactional net margin method. For this, we are going to cover on our next presentation, since we are time bound and we don't have time to elaborate on much on the things. So we can say, to summarize, the transactions, any transaction which we are undertaking with the related party, they have to be benchmarked as per the arm's length principle that has been provided in the corporate tax law. So they have reported that we have to take the approach that is on OECD to test the arm's length principle. Then we can move to next. Okay, so the authority, they have come into the picture. So which are the companies which are required to maintain the different set of files while we are having transactions that within the related parties. Then they have come up with the limit that if any company, if they are having a revenue of exceeding 200 million, then they have to prepare a master and local file. And of course, if we have any M&A group companies whose consolidated revenue is exceeding 750 million euro, or we can say 3.15 billion AED, they have to prepare a master file and the local file. If we see for the local file, then they have said means we don't have any limits. So all other companies which are having related party transaction, they are required to maintain a local file. So we can see in the law there are many articles wherein they are providing that the transactions has to be tested as per arm's length principle. Even if being same company also. Then if we have like in the if we see article 5 to 8 of the exempted persons, then we have like any transaction that is executed between exempted person and non-exempted means exempted persons, between the exempted and non-exempt businesses, that has to be this arm's length. Then article 15 where we have investment manager exemption, for them we have to do it. Then for the qualifying free zone in Article 8, we have like any transaction between qualifying and non-qualifying activity that has to be benchmarked. Then if we have any foreign permanent establishment, then of course related party transactions will be arm's length testing. Then we have Article 26 for transfer of business, then business restructuring. Then if we see if we see the transition provisions, wherein they have said like the opening balance, the transitional provision where they have said even the opening balance is for any transactions that has to be as per arm's length principle. So if the books that we are going to close before the first applicability of UAE corporate tax, it has to be benchmarked as per arm's length principle. Then mostly if we see the transaction, the transactions that are of capital nature, that has to be assessed moving forward to make the book ready as per arm's length principle. So the documentation they are discussing about are the disclosure form. Of course, we are expecting the form like filing the corporate tax return. There will be a form wherein we are going to file disclosures for all the related party transactions we are going to do during the tax period. Then of course the local file and master file is per the requirement. Then local file we don't have threshold, so the supporting documents we are having. Then if we are having a small business relief, then we can like apply for the same. So the assessment of corporate tax and penalties, the authority, they have come up with they have provided the assessment will be on the similar grounds, and it will be as per cabinet decision on number 28, which we already have in 2022. So the procedure law for both indirect and direct tax, it will remain the same. And of course, if we see if we are having an audit, then the deadlines and the document requirements and everything will remain same what is existing as of now. Okay, so authority, they can if they are going to audit, of course they will give us the notification. Then the audits will be carried out, which is already we have for indirect taxation in the country. Okay. Like we told the books that has to be as per arm's length principle. Then we have like the transition rule for that. Then of course the businesses which we have the assets and liabilities that we have for the corporate tax law into picture, like immovable property, asset, intangible asset, financial asset, and financial liabilities. This we have to benchmark, and we have to keep it on the same ground. Then we have one election before we go into the UAE corporate tax, that if we have real estate sector and all, for which we are recovery, which we are booking in the historic cost basis, then we can elect to keep the book as per the current date on the valuation method also. Okay, let's go. So the transition rule, that how it came into picture, then of course the issuance of a decree law was happened on 3rd October 2022. Then of course the publication was on 10th October 2022. Then from that till the period that we are going to we are considering, say the first period, say the calendar year. Then for them also, anything that we have done after 26th October 2022, those has to be justified. Then any restructuring and all which we are doing, or any transactions restructuring, those has to be which we should have proper reason why, commercial reason, and why we are restructuring the same. Then any transactions we are going to enter, of course the transfer pricing applicability and everything will be there. Transition, we can carry on. Yes. So we have a book on, we have the FTA, they have given the circumstances in which we can change our tax period, being within the anti-avoiding rule. Will be like if the person is into liquidation, then if we are a member of tax, if we want to register as a tax group, or if we want to transfer any, say, loss or profit in between the tax in between the companies where we have common stakeholder, we can change it. Then if we want to match our books with our group holding company, we can do on the same reason. Then of course if we have like any other valid commercial, economic, or legal reason, then they are going to accept it on those notes. Q&A, we are going to start within 2 minutes. We'll try to address the questions that are coming in the Q&A. So the first question I can say, like, if we have a company in BBI and managed from UAE, if it is liable for corporate tax, they have said any companies, for the resident companies, the worldwide income, if the companies, the income that is in the UAE, or the companies that are even BBI companies, they might be considered as the resident companies for UAE corporate tax purpose, being a company effectively managed from the UAE. Then we can see mostly for the free zones, diminished rule for the, I think diminished rule for the free zones, like the 5% rule. We have the include the activities which are qualifying for the free zones. So if any our income deviates, like those we have, like the incomes that are the included activities. So if we have, say, the incomes that are not of the principal nature, that can be of some ancillary nature, and we have, say, have a which does not qualify for the included activity, then for those we can have, like, say 5% or 5 million, whichever the law is per diminished rule, then we still qualify for the free zone activity. So since 100% cannot be done, they have given, like, if we should have at least 95% of the qualifying income, 5%, or the amount limit will be the 5 millions, then we will still qualify for the free zone activity. Then we can see, like, for this, so far, if for the qualifying income, it should be the companies those which are within the designated zone of the designated free zones, which is there as per the Federal Law Number 8 of 2017. Those free zones are only considered as the designated free zone for UAE corporate tax also so far. Then, of course, we don't have any exemption for the service industry. So we have some included and excluded activities. So included activity does not have any service component. We can see, like, the one question, like, how to apply for SMEs. For SMEs, of course, we have to register it. So once we register it, then if we are having all the conditions that like, if we qualify for SMEs, not being a part of any MNE, or say the branch or PE of free zone companies, then of course we can apply. So the income in the current year and our current year and the previous year shouldn't exceed 3 million. On this ground, we can apply for the SMEs exemptions. And so far, like, we can see like, for the free zones which are having IC sales, like we have questions like, what we can say a high IC sales. So far, they have said the distribution and all activities has to be carried out in the free zones. So we don't think the high C sales will be covered as a activity that will be qualified for UAE corporate tax free zone exemptions. Like, does the NGO, like business councils, required to register for city? Of course, the registration mandate is there, but if we already have the list wherein they have provided which are the organizations that are treated as public benefit entities. If we don't fall on those criteria, we can apply to the ministry to categorize us as to list our entity as public benefit entity. So if they accept the request, then we can go ahead and register. We have to register, and we can take exemption. So far, if we see corporate tax registration, only 5 sectors will be exempted. Apart from that, they have to register. They have to register. First is a government entity. The another is government controlled entity. Then again, we have extractive and non-extractive businesses, which are subject to Emirates level taxation, and the non-resident, if they are having only the state source income. Apart from that, all companies has to register. Then they can take their benefit of exemption and all after applying to it. So, like we discussed, the tax will be payable. So I can see after expenses and all. Of course, we had provided the incomes, then the deductibles that has been made. We can, after doing so, then we can do it. The expenses and everything should be documented and has to be justified for the business reasons. Then only we can take those expenses. So I can see what are the laws, what what is the treatment for the losses before the implication of the law, then the carry forward will be applicable only after introduction of corporate tax. So any losses that are before corporate tax law, they cannot be carried forward. Then we can see like if I'm liable for like if the company is liable for corporate tax being in free zone and conditions are not met, if the first requirement to be treated as a qualified free zone entity is like we have to meet all the conditions. If we don't meet the conditions, then we will be taxed as a normal company in UAE. So for the deadline for registrations, the companies, we don't have any deadline. So we have ample time before we prepare and go ahead for the registration. The registration will be mandated like before we are going to file our tax return. We can see about the companies which are in different zones, if they are qualified as a free zone. We already have a designated list of designated free zones is per Federal Decree Law number 7, 8 of 2017. So so far, same free zones which are listed over there are treated as designated zones. Apart from that, they are not qualifying for any designated zones. The company, it will be treated as mainland company itself. Partner salary, of course, it is a related party payment, so it has to be tested as per arm's length principle. If we are within the arm's length principle, we can pay the salary subject to the active participation in the company. And regarding the tax period, the tax period will be like for the companies, if they already have the financials and all, then it will be on the same period. If we have the one which we already have in picture, so if we want to change, then we should have like valid reasons for changing the financial year itself as per anti-evidence law. So the financial year that is in practice earlier, it will remain the same. Audit is required for all free zone entities of yes. I can see lots of registration questions, like if I don't meet threshold. We have already given which companies are not required to register. Regarding the tax periods, it will be like the one which we already have the financial period. So if our financials are starting on January, it will be January. If we are starting on April, it will be on April. If it is for September, it will remain September itself. Regarding the SME exemptions, of course, we have to register and we have to apply after the closure of the tax period itself. I can see like a single company, LLC, and all like natural categorization of natural person and all. We can see like if our we can say if our if our liability is limited, then of course then it will be treated as judicial person and it will be qualified like for the 3 million. If our liability is unlimited, then it will be treated as natural person, for which we have 1 million 1 million threshold. Exceeding that, we have to register and we have to pay accordingly. For all companies, the registration is already there, so all need to register. Like I can see, like if we are undertaking any projects with the related parties, being two companies in different jurisdictions, then of course for those transactions we need to, for any split of the profits and all, we need to see as per the arm's length principle. Subject to arm's length principle, we can transfer our expenses, and we can categorize our income in between two different jurisdictions. Regarding maximum allowance of salary and all to the stakeholders, they have to be tested as per arm's length principle. So we are going to test as per transfer pricing regulation of the transfer pricing regulation in the country, which is OECD based. Usually we are seeing mostly registration categories which are going to register and deregister. Let me explain it one more time for those questions. Only 5 entities are exempted. If we don't fall under those entities, we have to register. One is government entity, another is government controlled entity. Then we have companies which have extractive business, which is subject to Emirates level taxation. The companies which is into non-extractive business of the natural resources and which are subject to Emirates level taxation, those are not required to register. And any non-resident which has only state-sourced income, those are not required to register. Apart from that, all the companies have to register. And for the natural person, if we have revenue exceeding 1 million, business revenue exceeding 1 million, we have to register and we have to be compliant on the corporate tax law. For the partnerships, we have seen like it is unincorporated partnerships, like which has a unlimited liability. For those, it will be treated as partners. They are doing the business, and natural person themselves, they have to register. If we apply to treat it as judicial, and if it is accepted, then only we'll file it as a company. We'll try to see 1-2 questions if we can. Then we can see like the companies like which are designated free zones and which are not designated free zones. Then which it has already been listed in Federal Law number 8 of 2017, then we can see that is already there in FTA portal. So we have list of the free zones which are already categorized as free zones. If we are following on those, then only we will have like qualifying activities, the testing of qualifying activities and all. If we don't fall within those zones, then this is normal mainland company. So like I can see economic zones and DMCC and some financial zones and all, these are not treated as free, designated free zone as of now. So all these will be treated as mainland companies only. So any companies, like we have got some questions, like if they are having less revenues and all, they are going to register. Of course, we have to register for all the companies. We try to answer all. If you have some specific questions, then of course you can reach to us. Then of course we will be happy to help you out. So with this, I think we have to close for today. So if you have some specific questions, then we can get back to us. Then of course we will be happy to help you out.
Thank you everyone for joining us today. And we appreciate your participations. For the questions that has not been answered or we are yet to answer, we will send us an email to you guys in on your email ID that you have registered from. Plus, if you have further more questions, you can reach out to us on contact@itc-tax.com for any further queries. And for more clarification on, if you have any further more queries also, or you need any clarifications in regards to the corporate tax, you can reach out to us. And we also have shared our phone numbers on the screen, if you may see. And again, it's a pleasure to have your participation, and we sign up from here. And soon we will be conducting more webinars in regards to corporate tax, VAT filing, and many more other taxation subjects. So to register for those webinars, you can also send us the email on contact@itc-tax.com. And thank you for participating again.